Jose Ricaurte Jaén again. And today I said on the beginning of my currency video, I had another idea I wanted to share with everyone. I do a lot of stocks. I do a lot of equities, trade a lot of call options, put options. It works very well. I have served the purpose during this last couple, probably 4 weeks. And all in all, the idea I want to share with every one of you guys is all the time pay attention to the fundamentals. The fundamentals give you a lot of evidence of how you have to position yourself. And one of the favorite guys that I follow on Twitter is this guy, Charlie Bilejo. He recently started I believe, his own company. And I want you to focus your attention to a trend that is taking place right now. Take a look at CB's, central banks, and look at what he posted back on March 18. Poland cuts rates 50 basis points to going lower to 1%. Turkey cuts rates 100 basis points to 9.75%. Czech Republic cuts rates 50 basis points to 1.75%. And look what he's saying, more cuts to come. And you have everyone, Mexico, Mexico, I already talked about it, South Africa, Russia, everyone, cut. I'm just going to go up, because scroll up, what else he has? He has, I don't want to, okay, Taiwan cuts rates 25 basis points to 1, Philippines, Brazil, Indonesia, and let's see who else. We have UK cut rates 15 basis points. They have little to maneuver. That's the BOE, Bank of England. Australia cut rates 25 basis points. This is March 19. We are April 3. Now, 25 basis points, and now they're down. Australia, the RBA, Reserve Bank of Australia, 0.25%. South Africa, I already mentioned, more cuts to come. Let's see. One point I want you to take a look at this. U.S. inflation expectations, 10-year break-even, fall to their lowest level since January 15, 2009. That's the GFC, Great Financial Crisis, 0.50. Let's take a look at this chart because it's important for you to pay attention. Thanks to Charlie Bilejo. And look at the inflation target all the way down to what we had back all the way to 2009. And I think I'm just going to finish somewhere around, see, I don't think he's posting anything else. But I think you get the memo. We're going into, or we are just coming out of a round of interest rates cuts, everyone. And as I mentioned, the bazooka that the Federal Reserve has been, actually applied. What that means is that there's a lot of free money. I repeat, a lot of free money in the markets. And if you want to position yourself, you already have safe stocks. You can look at the video that Ross Givens, senior editor from the Insider Report, posted. If that's for you, great. But if you want to make a comeback, listen, if you want to make a comeback from this mess, 30%, 40%, 100% won't cut it. You actually need to position yourself, true, managing your risk, but you need to position yourself into, you have to find securities that will grant an opportunity for you to double, triple, and why not? 4 times your money. This is at your risk. You can actually access this. And today I'm going to share with you one position that I already have my portfolio, and I share this with clients. Everything I share with you guys, I'm already doing it with money. I use a lot of simulations just to track. Some of those won't go. I probably just go push everything, entire leverage on the account, but then we have clients that they do it totally different. You may want to do it totally different, okay? So that varies from client to client. Now, I want to talk to you about FAS. This is the have a direction, shares, ETF, trust, daily, financial, bull, 3 times shares. Now, what is this? I think I have it. Let's see if I still have it. What is this exactly? And just take a look at Investopedia. So what we want to do is designed to return 3 times the performance of the Russell 1000 Financial Services Index, the financial index, on a day-to-day basis. That's what it is. And you can see a couple names that I trade individually, like I trade individually Wells Fargo, WFC, that's the ticker symbol, Goldman Sachs. I am trading it a little bit underwater, GS, and you have insurance providers. And there's a list that you can always find, so you know exactly what are you buying and what is supposed to do. But what I want you to pay attention is this fact. The FAS ETF had posted about a 59% returns year to date, while the Russell 1000 Financial Services Index has grown by around 19% over the same period. Now, I think I can actually bring up my calculator. See, I can do that. And you probably just did the math, but the idea is, the idea exactly is for you to understand the power of how fast. Let me see if I can bring that. Okay, standard. So let's take a look real quick with numbers. Okay, so 59% returns year to date. I think that's way before the market adjusted to the downside. Divided by 19. That means that buying FAS, FAS, gave you probable, it just depends if you were invested already or trading it, 3 times your money. 3 times your money. It's a 300% return over just buying the index, or who knows, if you were buying Wells Fargo or if you were buying Goldman Sachs, what kind of return you will have. Remember, 3 times, so that's what it is. It's giving you 3 times your money, 3.110, a little bit of like an extra 10% there, but that's what it does for you. So now let's take a look at what it is. You already know, you have the information. Now let's take a look at the chart. And remember, every time when I want to look at something, look at securities, look at companies, I want to have the big picture. I have said it multiple times, like an eagle. Just fly, expand your wings, and don't have a narrow view of the markets. Go ahead and look where it was, the now, and where exactly it may go based on historical performance. We need to have that. Remember, markets have memory, and it will repeat. If it happened in the past, there is a probability on the table that it will happen in the now and the future. Always remember that. All right? Okay, so now let's take a look at this real quick. Now, I already have all my trend lines and ideas based on price rotation. I have discussed this as well. What I want to look at, point a couple factors. One of the reasons you're not buying this is because no one taught you how to do it. That's the number one reason, and that's the subject of the idea of this video. The 3 reasons why you haven't bought FAS so far. And the number one reason is pretty simple. No one taught you about this. So you never learn about it. Pretty simple. A lot of what you guys do with 401k, retirement plans, they just don't tell you. They probably have one of these individual stocks in your portfolio, called JP Morgan, very solid bank in the US. Wells Fargo, not so much lately, or Goldman Sachs. You hear about this, but you never heard about the financial spectrum. 2, the other reason, and I can throw you right away, is that you don't understand what is happening. That's right, you don't understand. For the majority of the retail traders, Main Street, you guys do not understand what happened or is happening. Now, no offense, please. It's not that I know what will happen. No. The point I want to convey is that you don't really understand what just took place. It's not a crash as it is, because we're not in the phase of financial crisis. That's not what is happening. We had a pandemic. It was a virus that out of the blue, no one paid attention. It turned. I have to remember who said this, but it was a white swan, because we knew it was coming, and then lack of attention turned into a black swan. Pretty simple. So this is why I said it, I repeat it. Main Street doesn't understand what happened and what is happening. And at the same time, what is happening is the key. In the coming years. But why? Simple. I started this video sharing everything, well, the key aspects from Charlie Billejo Twitter, is because if you focus central banks, CBs, Bank of Japan, SNB, Swiss National Bank, Reserve Bank of Australia, New Zealand, the Federal Reserve, of course, the European Central Bank, Bank of England, Bank of Canada, all these major banks that you may know, Western societies, they know, heard about it, but also there's a bunch of them out there just giving free money. They have cut interest rates so low, that is free. It's absolutely, they have flooded the markets with free money. And where do they have to go? U.S. equity markets. Now, this video is not for you to understand how long it's going to take to recover. This video is for you to understand that there is a scenario, something happened, something is happening, and if you position yourself accordingly, you will not only make 100% of your money, you will have the opportunity to make, just as using this ETF, FAS, FAS, 3 times your money and more. But there are reasons why you haven't, and there's probably reasons, those 3 reasons why you're going to miss it. And that's what I want to record in this video, not just because it will provide you with the tools, but also the understanding of what is taking place. Now, like I said before, if you want to get out of this mess, this situation, 100%, it's not going to cut it. Not even 10%. So let's not just talk about that old myth that if we were to get guaranteed 10%, listen, that works when you have $1 million and above. But it's not that easy. Probably with someone that has $500,000, maybe $300,000 will work to get a fixed, guaranteed 10% per year. But if you have $50,000, or if you got hit, which you shouldn't because you needed to have your stop losses or trailing stops, your portfolio, you should be liquid right now. But nevertheless, let's just focus. Now, the third reason, before I jump into FAS real quick and share the ideas I have, is a lot of Wall Street members of guys in Wall Street, they advocate for active portfolio management. They're looking for specific securities, and although passive investment has been gaining a lot of traction over the last couple of years, they still fight it, and you still think that you can be picking stocks. So it's active versus passive investing. That's the battle. And a lot of people, a lot of retail traders, Main Street, still plays with the active idea, thinking that will yield better returns, which is not true. So those are the 3 reasons why you haven't bought FAS, FAS, Direction Daily Financial Bull 3 times shares ETF. There are these myths, these culture ideas, rewire. They are sort of set on your subconscious and prohibiting you to take action now. You heard about it. You know how much money you can make. Let's take a look at what happened in the last couple days and been happening over the last years with this ETF. So first, monthly view. That's what I want to take a look at. Where is the money moving now? You can see how some point back in November it was about $2. Then it make a big push. You have all this time make a big push all the way to August 2015, and then there's a reversal. Easily we can see this pullback is somewhere around the Fibonacci levels, the trend Fibonacci levels, and we'll do it right away so you have an idea. There you go. The 61.8% Fibonacci, $14, and then just to the roof all the way to almost $80. So you probably had the opportunity to buy in this pullback. Let's say $16, three times your money from 2015 all the way to somewhere January 2018. So about like 3 years to get 3 times your money. Again, I repeat, pretty much that's a good return. But what I want to understand now, it's what is taking place. Now, 2 very important levels. Take a look at this, and I'm going to zoom. Let me zoom. I'm using Trading View for this example. It's just a chart application, and there's some execution depending on the brokers. Now, it went all the way down to 16, which is exactly the pullback on February 2016. Keep that in mind. Then it goes all the way up. You have it when the new low back is probably somewhere in the last week was $14.25. Okay, and then if I zoom this, let's take a look. See what it did. About 48%. Actually, if you look at this before the close of the month, it was about 64%. That's what it did in about a week. 64%. There's some other companies, probably the case of Boeing, that was a miracle. It made almost 100% in less than 3 days. But those are very specific cases. Now, with so much free money, what you have to understand is all that free money will go to the financials. Wells Fargo, Goldman Sachs, JP Morgan. So if you cannot, and there's a few insurance companies now, so if you cannot have that, you don't have the time, you don't really know, you don't want to invest in mutual funds, do yourself a favor and just buy FAS. It's pretty simple. You have seen the performance. We already are in the same process, because remember, this is not a financial crisis. This is a virus. Totally different. We're using financial tools to try to save the day. But at the end of the day, what we need is a vaccine. Once that vaccine is in place, then the virus will be easier to contain. Way easier. But then all these banks, all these financial institutions, we have tons of cash. Thank you to their central banks. And you have to take advantage of what is happening. So then you can take all these opportunities. If it's trading around $20 right now, and still we may have an opportunity that, let's say something goes wrong, the markets don't react accordingly, and it drops, you will have only a drawdown, not a loss of 50%. So let's say from this level, you have an opportunity to make 87% of your money. After that, almost 200%, and it will go ahead and look for new highs. You have, again, at this level, 300% of your money. That can be happening in the last 24 to 36 months. On the other hand, for example, if the whole thing, the ETF were to drop 50%, get to this level, you recover your money back, something close to 136. After that, 200%, then almost 500%. Look at this, exponential growth, 300%, and then to the next level, you make about 535%, and then to these highs, not the all-time highs, you make 757% at the same time. So the idea, at least a suggestion, just like a hedge fund, keep in mind, don't throw all your cash available right away into this. Just buy a portion, save a little bit of money, and then wait for the pullback. If that actually happens, you will be pretty happy. You will just load the boat at a 50% drawdown. This is a position that I personally wouldn't use a stop loss because of the conditions that we're facing, but see the potential all the way to this new high, 757% in about estimated 36 months. The most important, the fundamental, it's already in place, is what is happening. Central banks have thrown all the money. We know the Federal Reserve just expanding their books into the $1 trillion. And thanks to Charlie Bilejo, one of my favorite guys on Twitter, you can see all that is happening as far as central banks cutting rates. And remember, there's always room to cut more. Absolutely, do yourself a favor, add to your portfolio. It's worth your time. Take a look at FAS, Direction Shares, ETFs, Trust Daily Financial Bull 3 times.